Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, September 20th, 2013, ending quite the volatile week this week. A lot of volatility, mostly due to the U.S. Federal Reserve surprise on Wednesday that they were not going to taper at this point in time, so sent the markets reeling. Well, today we had some minor reports out, inflation numbers out of Canada, retail inflation numbers, CPI. The core rate up 0.2%, a little bit more than everyone was expecting, and the actual rate itself was unchanged. So that is down a little bit from expectations. So kind of a wash there. And also out of Europe, consumer confidence down 15. A little bit worse than expectations, but a little bit better than last month. So overall news for today, pretty much benign. Next week we got a full docket of stuff coming up. Monday is PMI day. Starts in China, runs all the way through to the U.S. There are no real big surprises expected. Everything is supposed to be slightly higher than last month. So we'll actually see how that comes out. But generally, pretty much across the board from China until the U.S., slightly higher numbers are expected. On Tuesday is the German IFO business climate, expected to be a little bit better than last month. And then in the U.S., the Case-Shiller price index for housing, which is expected to jump to 12.5%. So we'll see how that actually comes out. But we have been noticing some price pressures in the U.S. for housing. Also on Tuesday, the Conference Board consumer confidence number for the U.S. 79.9 is what is expected. That's down from last month's 81.5 and a little bit lower from the last couple months. So we'll see how it actually comes in. Richmond Manufacturing Index also due out. Reading of 17 is expected. So after this week's Philly Fed number that really surprised everybody, everyone's going to be looking to this Richmond Manufacturing Index to see how that comes in. On Wednesday is GfK German Consumer Climate number, which is expected to show a little bit better number. That is 7.1 as opposed to last month's 6.9. In the U.S. is durable goods, very volatile number usually. Last month was negative, so this month they're expecting unchanged to a little positive. And then also in the U.S., new home sales, 422,000 is what's expected. Now we've had some lower numbers for permits and starts, so this number may not come in as good as expected. On Thursday is the UK current account. Expectations are for a little bit better number, so that could move the pound a little bit. Also, the last revision, final revision for GDP for the UK, no expected changes there. In the US, the final GDP is expected to change upward slightly to 2.7%, and that's from 2.5. So that could be a market mover as well if it comes out anything different than the expectations. And then also in the US, pending home sales expected to be down 0.9%. That may be a little bit different too because of the late numbers that we've had this past week. So we'll see. And then on Friday, GfK consumer confidence out of the UK. Expected to see a little bit better number, but again another negative number, so we've been negative there for quite a while. And in the U.S., personal spending and personal income expected to both show decent increases as opposed to last month's barely positive 0.1%. And then the revised University of Michigan consumer sentiment number, expectations there are for 78.2. We were above 80 there for a while and then dropped back the beginning of this month, so we'll have to see how that actually comes in on the final there. Alright, on to the technicals here. Very, very quiet day, just bouncing around, not any real direction, and still everyone kind of still positioning themselves after that surprise on Wednesday from the Fed. So today's action up 5 points right now in the Euro US dollar and we can see here with the last couple of days we're just bouncing around. We could push our way a little higher here, get up to that 136, 136.50 level and kind of complete this pattern, get up to these old highs. If we jump up to the weeklies here, we still have this gap from the beginning of this week, which will probably be filled at some point soon. But we could push up next week, get up to that 136, 136.50 level, and then maybe turn around. All depends on how next week finishes out, as well as the month, which ends a week from Monday. So we are creeping ever higher here, but very, very begrudgingly. So without a lot of conviction, this market is going to have a very, very tough time moving any higher. And we could get up around that 136, 137 level and turn right around, because there really is not enough momentum here. Pound dollar, very, very similar kind of situation, although we are looking like we're pulling back into a flagging type of position where we'll rally up again, maybe get up to that 163 level. Now this is what's concerning here, is that we had a nice angle going up and all of a sudden it's really steepened up. So that's usually an indication that we're about to blow off here. And so we run up to that 163, and that could be it. Here we are on the weekly, so we can see that gap in here, gapped right above that trend line, which is a positive sign. So we run up to the 163 area, and then maybe we pull back, bounce around in here for a while, and then we'd have to see what will happen. Now of course on the monthlies we need to close the month at this level or higher, so a week from Monday we need to see that that movement get up to at least a 161 area, maybe in there, and we could get up to the 163 and close up there. That would be very positive also. US dollar against the Swiss franc, down again today, fourth day down in a row, and we're down 13, which is not a whole lot, but we are kind of creeping a little lower here, showing a lot of weakness here in the dollar against that Swiss. But again, we're really picked up steam here in the last few days, and that's usually a sign that we're going to turn around. You can see here stochastics just pegged to the bottom. On the weeklies we got that gap up in here. We're down at the lower end of the range, the trading range for the last couple of years. So a lot of buying interest in this area, and we can see in the stochastics how they've been stair-stepping down. That's usually a sign that we're going to turn around, just like we did back here. You stair-step down and then all of a sudden they explode to the upside. And on the monthlies, well, we're now extended to the downside on the monthly, biggest range that we've seen in a couple of months, and we're again at that bottom end of that range that we've been at for 2 years now. So really in a position here where we could see a fairly violent turnaround. US dollar against Japanese yen, down 10 today. Very nice day yesterday, eclipsing the previous day's sell-off, so very positive there. But if we don't finish on a positive note today, that's not exactly a good sign for next week. So really would like to see us at least up 10 for the day, and that may happen, yet still we still have a couple hours of trading left. So depending on how we close today is kind of important. On a weekly basis, well, we are going to close the week well above this this trend line, and this will be the second time now, the second week. We did last week as well, and so that is a positive sign. And this week could be a reversal point, as we're seeing this with this tail. So it is positive, but it's not overly aggressively positive. So I'd like to see a little more conviction here. On the monthlies, we're still doing very well here. We're following that very steep incline on that trend line, and we could burst out of here possibly next month. So we'll have to see, but how we close the month out. But for right now, we're consolidating with a sideways pattern, which in and of itself is bullish. Euro Swiss down for the third day in a row. We're down 13 right now, pushing the 123 area, and really looking like we'll probably start to bottom out in here. We're just testing this double bottom that we have in here, and we'll see if we actually exceed it. There seems to be quite a bit of buying when we come into that area, so would not surprise me to see us get in there and get down in here, maybe even on Monday session, and then turn around. So it's well overdue at this point. Euro yen having a little bit of a resting day, down 7 pips, and yesterday's explosive move here and closed to some new highs. So it looks very, very good longer term here as well. Looks like we're going to run to that 137, 138 area that we've been looking at, and then that may be it for a while. We may consolidate and come back down maybe to the 125, or the 120 area. And longer term here, if we jump out to the monthlies, we can see how we could get up in there and then maybe find our way back down and correct a little bit and then move back up again, either to test that upper limit or to exceed it. US dollar against Canadian having a very nice recovery here, up 30 pips right now. Yesterday's reversal and now today's continued follow through. That's a very good sign. We sold off quite vigorously on Wednesday with the news from the Fed, so here we are. We've recovered pretty much all of that sell-off, which is a good sign. Now Monday session, if we could close up above 103.30 area, that would be even more positive. If we jump out to the weeklies, we can see how this week is shaping up here with this long tail to be kind of a reversal also on the weeklies. Again, how we close the week out today in a couple hours will determine that, but it looks very good at this point. And on the monthlies, well, with a little over a week left, we're still hugging that little bit of a trend line in there, and we're in the same range that we've been at for the last 3 solid months. Really looking forward to us getting out of this, and we could break out here sometime soon. It's starting to build more and more momentum here. Australian dollar against the US, down about 38 today. Kind of a same situation here as with the British pound against the dollar, but here we're not having as much momentum to the upside. On the British pound we got that curvature and almost straight up, whereas here we got a decent angle going here, and we're having this nice flagging coming down, so we could move our way higher here in the next week or two. We've been looking for us to run up to that 96, 97 area to kind of complete this correction, and we can see that a little better here if we jump out to the weeklies. We come down, we based out, and now we're rallying back up to get up around in here to this area, back up in here, be 96, 97. And then form a topping pattern and then sell off and make new lows after that. Longer term, of course, is look at those monthlies, and this is really nothing more than a correction in this longer term extreme sell-off. So really look for us to get down to that lower 80 area eventually to complete this sell-off. At that point, and then we could have more of a meaningful bottoming pattern and a turnaround then to go up, maybe make new highs at that point. We'd have to see. That is it for this week. Questions or comments, please stop on by FX Addicts. I am around most of the time. If I'm not for some reason, you can certainly shoot me an email, tim@fxaddicts.com, and be more than happy to help you out with any questions regarding trading, currencies, interest rates, anything like that. So feel free to stop on by. We do offer a 7-day free membership, so if you have not signed up for that, by all means please do. Thank you.